What happens to real estate prices during a recession? Yeah, you're going to be surprised by the research I did for you. Now, I pulled this data because the Toronto real estate market has been surprisingly resilient as of late. And the next hurdle I can see us, as a talking point in the media headlines is what happens if and when this recession hits. Because a lot of indicators are pointing to some kind of recession in the short to medium term future, in our economy right now. So if you want to find out, stay tuned. Now, if you're looking for some help on how to navigate this real estate market, especially if you're coming across the question I just posed to you about the recession and how to navigate this and whether it's the right move for your unique situation, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX brokerage in the Greater Toronto area, on top of making awesome educational real estate content just like this one for you. Now, if you found any of these videos helpful in your real estate journey, whether that's buying your first home, buying your first investment property, selling your home, or just general curiosity about the real estate market, then help me spread the knowledge of everything I'm putting in this video by smashing that like button and subscribing to the Prime Properties channel. Because the unspoken rule is free content, like and subscribe. So this recession question has come up a few times in the last 2 to 3 weeks for me. And even though I knew the answer, I wanted to pull the data for myself personally and share it with you, as I'm sure some of you are also thinking this, right? And the short answer is prices actually go up during the end of the recession, most of the time. Now, there are a few times in the past where there was a 2 to 3 month window where prices drop quite quickly, hence opportunity, and more on that later, but nowhere near the drops that we just had last year, right, in 2022. Weird, right? So the reason for this question coming up is that after the price dropped last year due to interest rates, the next scare for Toronto real estate is a recession and what happens to prices of real estate then. Now, to jog your memory a bit, right, outside of the 20% price drop we saw from say April 2022 to July 2022, where the sellers had to fire sell their properties because they bought first and they had to close that property they bought, the market has been pretty flat and it's starting to trend up now. So here's the chart I used from the last video on the market watch as a refresher for you. And I'll keep it up here. So in the summer last year, everyone was saying trigger rates, it's going to bring a ton of inventory. Nope. Then everyone was saying power of sales are going to be increasing. Yeah, definitely, but not enough to move the market. Then there's a trigger point, which is the negative amortization. Listings? Nope. So next, recession. Now, I didn't think the trigger rate or trigger point would spur a lot of inventory, but I did think that the private lenders not renewing would provide some kind of price discovery, meaning prices going down in the spring, and it'll kind of be balanced and flatline with the normal seasonal uptick that we were probably going to have. I was wrong about that. We got the uptick, but it didn't flatline. Now, where there may have been some price discovery downward, it kind of stopped in January of this year, and the demand came back roaring back around the same time the interest rates from the Bank of Canada decided to make that announcement they were going to pause. So if you said 9 months ago prices would be going up because we have a 20 plus year low in listings, you would be laughed at, but that's exactly where we are right now. So this brings us to where we are right now. Will prices drop during a recession? Yes. Absolutely. They rebound though surprisingly fast. So here's the data I pulled for you in a chart form. So the blue line represents the price of the Greater Toronto area real estate prices starting way back into 1974, as long as they had the data. And the orange line represents a recession, meaning at the top line it had a recession in Canada and the bottom didn't. Now, the only caveat to this data is that I couldn't get the prices as quarterly, which is what I wanted, until 1996. So I couldn't break out the seasonality a little bit more. Now in this chart here, you can see that we had a recession in late 1974 and early 1975. Prices during that period went up 8% from 52,000 to 58,000. Next recession was in the 1980s to 1982, a rather longer one. And prices during that 2-ish year went up 27%, which is wild, from 71,000 to 90,000. Then we had the big one in the 1990s, which lasted 2 years, but it's what started the 10-year flatlining of real estate prices in the Greater Toronto area. Prices fell 16% here, less than what we just saw, and the prices essentially flatlined thereafter in Toronto for 10 years until about the early 2000s. Now, this is the only period if you held real estate for more than 5 years in the Greater Toronto Area where you actually lost money or broke even. Something to note here was there was also a population boom as a percentage during the start of this 1990s decade. Then we had the next recession where people probably remember, which was in 2008, and it lasted 3 quarters. And now that I have quarterly data here, you can see prices do drop quite quickly, but they rebound quickly after as well. So in this recession, prices dropped due to the shock, but they recovered 9.25%, reaching new highs after the recession. And that period was 9 months, 3 quarters. So I'm going to zoom into this chart a little bit more so that we can just look at the 20 years so it's easier for you to see. You can see here, the initial price drop was about 5% or 18,000 and went back up 9.25% in 3 quarters. Then we have our latest recession due to the pandemic. Prices initially dropped 12,000 in that quarter, but I know for a fact if you go monthly, there was a really big drop of 9%, but it rebounded super fast and super aggressively as everyone wanted to move and interest rates came down. So prices went up 12% by the end of the recession. And I'm sure, as you remember, we have continued to have a massive bull run from then. Prices are up another 35% from the recession to where they are currently right now, despite prices dropping 20% in 2022. So what can we see from the history and the data here? The first observation is that there's a very small window during a recession when it's first announced where prices drop. But keep in mind, we never know when they are. We can only see a recession looking backwards. And then they generally rebound with the exception of the 90s rather quickly too, right? So sounds kind of familiar to what we just saw, right? But that wasn't technically a recession. But, I can argue the GDP numbers are a little bit fudged anyway, so it would have been a recession. But anyways, I don't digress. So here's a little fun chart for you. Just before all these recessions that I was talking about in Canada, the Bank of Canada hiked their overnight rates massively, just like what we saw last year as well. That's another indicator, in addition to the yield curve being crazy inverted right now, that we should be having some kind of recession in the future. Interesting data, right? Look, this isn't meant to scare you into selling your real estate or tell you to buy real estate because, Toronto real estate is recession proof, but to give you the data so you can understand it and make your own decisions. Because look, if you need a new home for your new family, you need a new home for a family. And as you can tell, with the exception of one time, if you plan to hold your real estate for at least 5 years, which is what I've always said and recommended, historically prices have gone up except for the 90s. And this is using 50-year plus of data, just so you know. So how do you make sure you hold it? If you're really, really scared, get a fixed 5-year mortgage right now. It's sub 5%. The other question I get is, should you wait until a recession to buy to get that sweet, sweet dip in the price? Look, that's a question for you. And I generally say, don't time the market. And as much as I follow the data and I transact daily, I don't even bother timing the market. It's just buy and hold. But if you look at the data, it seems there is a very, very short window that you can buy the dip. But you'll need to have some big cojones to do it. It's easy looking back, but when you're in it and you're reading the headlines and emotions are getting the best of you during it, it's totally something else. I can tell you for a fact that during the pandemic, I told a ton of clients that it was an opportunity to buy in May of 2020. 2 people took me up on the offer and they made out like bandits. Everyone else said, I'm going to wait until the dust settles. Then it's too late because the rebound comes very fast. This is why timing the market is so hard, especially if it's for your own primary residence and you have kids and you need to sell in that exact same market to move. Hence, it's a silly choice if you ask me. Also, don't forget, you would have to know exactly what you're looking for in that very short window and not knowing exactly when the bottom is as well, which I would say is almost impossible with emotions. But people will think they always can't do it. That's just human psychology. Now, the other thing that you must consider during a recession is your income and your job. What will happen to it? Is your job and income recession proof? Are you still going to have a job? Because if everything we've been through this last year hasn't seen any more of the real estate prices come down, you probably need unemployment to skyrocket so people have zero income to pay their mortgage for the listings to come on the market. So we have discovery of pricing going down. But would I be surprised if a big recession comes and we see the mortgage deferrals and amortization extensions come back just like we did during the pandemic? Nope, not at all. That is because it's already in the playbook right now, and I bet it'll be utilized if a big recession comes. We're just in this kind of economic world where capitalism isn't allowed to fail. Because if you just look at all the bailouts for these massive banks that failed in March recently, case in point. Now, I don't necessarily agree with this, but this is the game we have to play. It's what we are born into, and this is the economy. We just have to know what the game is. This is why I made this video. And while I'm fairly bullish on real estate long term, the reason for that is because I'm super bearish on what the dollar is, our currency. Meaning I don't think the dollar is going to do well in the future. Just think about the data points I showed you in this video. Is real estate prices going up, or is the value of the dollar that you're buying the real estate going down? Because the house is the same. So if you're as old as I am, an early millennial, you'll remember that prices for gas as a kid was like 50 cents a liter. Through ups and downs, it's now $1.50 a liter. It's tripled. Just like the price of real estate since the late 90s. You know what hasn't tripled? Incomes. That's the problem, right? So the rhetorical question I have for you is this. Are real estate prices going up, or is the value of the dollar that you're buying the real estate going down? Right? And if you made it this far in the video, here's just some more data for you to reconfirm all these things I'm talking about. This is the same chart I showed you, but it's for the US, right? So you can see in the blue bars, it's basically where the recession is, and the red line is the price of real estate in the US. You can basically see the times the US had a recession is rather similar to when we had it, but what happens to real estate prices in US is also very similar to Canada. It goes up shortly after. Again, there's one exception for the US, that was 2008, the GFC, Great Financial Crisis, where prices got absolutely wrecked and we got jingle mail and they stayed flat for almost a decade. Similar to Canada's in the 90s. But in every other recession, prices recovered pretty quickly. Interesting data point, right? Anyways, I hope this gives you the knowledge and information you need to navigate this real estate market. As with most things I've said previously, I think this is going to be the new talking point on why real estate prices will crash, just because we're over all the other ones and they've kind of been disproved. A broken clock is still right twice a day, right? So these recession headlines are coming as a lot of indicators are pointing to it. Just understand what that data is and what it means for prices. A lot of people are going to say history doesn't repeat, but it does rhyme. And as a person who understands the data and is also a really good salesperson, I can argue both the bullish side and the bearish side for real estate. You just actually have to understand for yourself the strategy to navigate all these turbulent times depending on what you're trying to do. These aren't going to be the first times we have these problems. They also won't be the last. This is why you need to work with people who know what the heck is going on and what they're doing, like us, right? So if you are looking for some help on how to navigate the real estate market and you want to come up with a strategy so you can hold your house through a recession, frankly, if you got the Konas and you want to try to time the market, which I don't recommend, you can if you want, you can call me and we'll try to figure out when this market or window will be. Or even if you're just trying to sell before the recession because you're a little bit scared, again, you do you. Everyone has their own different risk tolerance. There's no right or wrong thing. It's just up to what you want to do. And if you want to kind of talk about all the scenarios, you can book a call with me using the link that's right here. Tell me about your unique situation and we'll see what we can do about it. Link again right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?